It is Brian Shannon from AlphaTrends.net. Today is Friday, the 9th of February, 2018. The market had a pretty rough week. Let's look at the numbers first, and we'll go back to that chart in just a moment. We lost basically 5% across the board for equity indexes. For the year, we have the Nasdaq being the only equity major ETF that I look at here, positive year to date. Semiconductors down just slightly, but today was obviously a big bounce back day after a lot of bleeding this week. There was big news in the volatility market. I don't trade volatility. I'm not a volatility expert, so I'll leave that for other people to talk about, just as I don't talk about fundamentals. What I talk about is the technical analysis and looking at what people are actually doing with their money. And when we look at the longer term chart of the S&P 500, this is a weekly. Each candle represents 1 week. We have a 10, 20, 30, and 40 week moving average, roughly equal to a 50-day, 100, 150, and 200. No doubt you heard that we touched the 200-day moving average today, and that was the first time since late 2016, just before the election. In fact, the market had sold off on fears about the election, and we've been straight up from there. Not straight up, of course, but here we are right now, right on that 200-day moving average. So let's take a look at it from a daily perspective, and you can see on the daily time frame, here is that 200-day moving average. So it's more accurate because we're looking at days versus 5 days in a week times 40 weeks. But the point is that buyers did emerge there. It was kind of the last level that people were looking at as potential support. And as I always say, we only know real support after the fact. People have been trying to buy this market as it pulled back to the 20-day moving average, the 100. The 100 was right here. The 150 is right there. And today, intraday, it was the 200-day moving average. Well, we look at, as you know, I look at volume weighted average price levels a lot. And when we look at some of the key volume weighted average price levels, you can take a look at, for instance, the volume weighted average price from the beginning of 17. And we had found support on that in 17 right here. Well, that showed up right at the 200-day moving average. So if we also take a Fibonacci off of that level, what we see here is that we came down pretty much exactly to a 61.8% retracement of that. So it seems like it's likely here that we've made a near-term bottom in this market. It is possible that we could get a retest of that. Let's take a look at the intraday time frame. Here we see the 30-minute time frame. And when we look at the 30-minute time frame, that simply means that each candle represents 30 minutes worth of data. So when we back it up a little bit, we can see here that basically here's January 30th. We took what we were looking at this week was one, we were below this declining 5-day moving average. And I always say that we want to look at the market from a swing trade perspective as guilty till proven innocent while we're below a declining 5-day moving average, meaning that we don't expect these big bounce rallies to hold while we're below that 5-day moving average. We also looked at the volume weighted average price from the January breakdown, and you can see that this is exactly where the sellers emerged, and we saw that in real time at Alpha Trends on Wednesday morning. And then for the week, we broke down below the weekly volume weighted average price, which was also then followed by the volume weighted average price from the low that we saw on Tuesday. When that happened, that's when we had confirmation that the next leg was in fact lower. So here's where we are now. We've got mixed messages on various time frames. We're still below the volume weighted average price from this peak. We're also below the volume weighted average price year to date, meaning the average price that people have traded the S&P 500, the average long is engaged in the market at 273.5, but so is the average short. So the average long is losing money year to date and of course month to date. Let's do this. Let's back that all out and try to look forward rather than just backwards, so we can try to figure out how this trend might emerge and show us a better low risk opportunity. Let's say Monday morning we continue up towards that 5-day 5-day moving average, and then we pull back and maybe don't come down and test it. Maybe we do something like this, and then what would happen was that would give this 5-day moving average an opportunity to flatten out, and then we would want to get long from a swing trade perspective right here with a stop underneath the most recent relevant higher low, whichever makes most sense to you personally. So I'm still treating this market as suspicious. It's good to see that we did get a big bounce. This bounce, we're seeing big volume in here, and volume and volatility tend to peak at turning points. But we are still looking at a market that, even at the end of the day today, we came right up to the volume weighted average price from the low that we saw on Tuesday morning. When we look intraday, even, we can use these volume weighted average price levels in ways that a lot of people aren't using them, such as the volume weighted average price from the day. We were below most of the day, but then the morning low showed that it had, from this volume weighted average price, some support in there, and then we got back above the volume weighted average price of the day and from the low, and that's where we saw that real surge in the afternoon. But that's more for day traders, and I really don't think that most people should be day trading. In a volatile market like this, there are more opportunities for day trades, but again, it's a pretty difficult racket and not appropriate for most people. That is day trading. The Nasdaq, kind of similar story here, of course. The daily time frame, we're still above that 200-day moving average. The 200-day moving average is down here at 148. But we did see that an important volume weighted average price did pretty much hold here, and that is from the July lows of last year, that we were looking at this as a potential support level, and we only know support after the fact. We look at potential levels of support and we say, here's where we want to look at the market a little bit more carefully, and then for whatever your time frame is, drill down to a shorter term time frame to look for actual evidence. The volume weighted average price from the beginning of 2017 is down at 145, and the 200-day moving average here. So those aren't really significant, but same kind of story here. And this is what I was showing subscribers was a potential scenario earlier in the week. We of course didn't have that. Instead, we're stuck below the wednesday weighted average price from this move. And again, in the Nasdaq, that's exactly where the sellers came in on on Wednesday morning. And now from the volume weighted average price from the low, we're still below, from Tuesday's low, that is, we're still below that, and we're below a declining 5-day moving average. So once again, let's expand this range here so we can try to figure out not just what's happened, but what could potentially happen. Maybe we run up through that VWAP, up towards the 5-day moving average, and even through it. Let's say we moved up through it. I would still be suspicious because the 5-day moving average is advancing. Now, there would be a great day trade in there, but if it comes down like this, and then what we would have is the 5-day moving average could flatten out. The volume weighted average price off of that January breakdown could be absorbed, and then we would be looking at, now it's okay to look to buy for a swing trade. You might say, well, look at all that upside that we're missing by not being involved. What most people, they only see this low and how far we've come from there. What they don't see, or what they don't feel, is the people who tried to buy each one of these levels on the way down, and the people who bought into here who thought they were so smart, and hopefully they got out with a profit on that rally. But the point is, it's still not set up for a sustainable move back to the upside. The Russell 2000 was pretty interesting because this market, it closed above the 200-day moving average, but we were well below it. And the key level here today, in fact, was the volume weighted average price from January of 2017. Let's do this. Let's take a look at a clean chart with nothing on it except for two volume weighted average price levels, one from January of 17, and look where those buyers emerged today. I don't know if it's a coincidence, but it's certainly worth noting. The Russell 2000 continues to underperform overall, and it is below the volume weighted average price from January 30th. It's below a declining 5-day moving average, etc. So maybe the same type of scenario develops, something like this, and then it can continue to move higher. The semiconductors, I had pointed out earlier this week that we had the potential or an important level to watch with the volume weighted average price off of last summer's buyer's lows, and we looked like we were trying to stabilize there briefly on Thursday, but when we take a look at the intraday action, it really didn't show much evidence at all. We couldn't get above the, what was Thursday's volume weighted average price here, which of course today became a 2-day volume weighted average price. The main point is we still have a declining 5-day moving average. So we have, very short term, the buyers took back control today. That's good. It's holding above the 2-day volume weighted average price. But, the average of the last 3 days, we're right at it. The average of the last 4 days, people are still losing money. The average of this past week, people are losing money. So that's not a stable base of support to rally from. Instead, we need to back and fill and continue to absorb some of that selling pressure before it can sustain a move higher. We're in a key level of importance and significance, and what we want to see is that we did undercut this prior low and we undercut that volume weighted average price. The lows from today, Friday, will be very important, I think, going forward from here. Biotechs, we started out the week looking at this saying, let's look for potential support near the 50-day moving average, because not only is it the 50-day moving average, but it's a nice cluster of volume weighted average price levels that from these previous highs and lows. But what did we see when we got towards that 109 level? Did we see any evidence that buyers were gaining control? Absolutely not. This is that 109 level. What we saw instead was a rally that we were highly suspicious of because the declining 5-day moving average, and sure enough, it broke back down and saw continued lows. Where we ended up showing these lows showed buyers come in is again an interesting level. January of 17, the volume weighted average price. We spoke about this all last year about how this was a bear trap. We tested it late in the fourth quarter and tested it once again today. So I think that most likely, the market doesn't care what I think, but most likely will continue to hold above the 100 level in here. But what we want to see is evidence. What we have right now is, since this breakdown began, the average price is up near 110, and we have a declining 5-day moving average. So same story. Maybe we rally straight up to that level. And the people who bought today, look to take some off if that happens, because what's most likely to happen would be something more along the lines of this, and then you would have that backing and filling, and perhaps then it could sustain a rally higher. One thing we did this week was actually just today, was take some profits off in our Bitcoin trade for Alpha Trends. We're long at an average of 80.36, and we took some off today at 87.50 was our target. It did end up hitting that. I think Bitcoin is probably making a low, but what I'm really kind of expecting, we're out of about a third of our position. What I'd really like to see over the next day or two would be a pullback down to the 5-day moving average, and that's also approximately the volume weighted average price off of the recent low. That recent low was also the biggest volume Bitcoin has ever traded. Keep your eyes open next week for a post about gold. I've kind of spoken about it a little bit, but gold is above a rising 200-day moving average. It looks like it's getting ready to break some resistance here on this weekly time frame. I had mentioned in a tweet that I was looking for a pullback down towards the 50% retracement. That was over in here. I said it looks like it should pull back down towards about 1305, which is a 50% retracement, and the location of the 50-day moving average. When we look at a more intraday time frame, we're below a declining 5, 10, and 20-day moving average, and here on the 15-minute chart we can see that with more clarity. So if you're a pullback buyer, you want to start to get interested in here, I'm going to lay out details of how I'm going to trade gold and why I think that it has the potential to head up towards about $1,600, $1,700 an ounce.